Are you looking for a good Forex strategy that is low risk, easy to execute, and hard to fail? Well, then this is the video for you. I'm Joachim Yeje. This is Clear Trades. Hit the subscribe or the like button if this video is enjoyable for you. I need to make a disclaimer. I have not come up with this video, or I have come up with the video, but I have not come up with a strategy in this video. I've taken the strategy from Nick Sean. You can go and check him out. He has a YouTube channel. He has personally mentored me. And when we start working together, he said, do this approach. It's the easiest way of learning Forex. It will hone your intuition and help you watch the markets. And that's exactly what it did. And it's been a really useful way of trading. He still trades that way. It's one of his approaches. It's a DCA approach called dollar cost averaging, or a grid approach. What that all means, we'll look at that just in a second. I don't know where he learned it from, where he came up with himself, or whether he has taken it from someone else. I don't know, but this is not mine, okay? The other disclaimer I need to make, trading is risky. You're going to lose money. Lots of people lose money in Forex. If you're going to go into Forex, at least go into a demo account first. Make sure that you understand the strategy, that you forward test it, that you have good results, and that when you do start with money, that you size very small and have a small amount of money in the account in case you do blow it. Then it is not the end of the world. With that out of the way, let's head over to the charts. There we go. And let's do strategy. Strategy is actually not that difficult to execute. It's pretty simple. I've already hit the replay button. I've already gone as far back as I can. I made it in a way that I don't see it. And by the way, if you're interested in how I trade, you can go to the Telegram channel. I call out my trades in there. Links in the description below. So anyways, so what do you do? How does this work? Before we go, you can basically randomly enter where you want to buy and sell, and you are going to manage the trade. Now, this is really good, because if you were to just randomly go somewhere and it pushes against you, you learn to handle a trade that goes against you. This is only possible if you're taking a small amount of sizing. Like if you're sizing super heavy and it pushes against you, it's not going to work. So let's take a real life example here. It looks like this is starting to come back up. It seems to have found support here, but I'm just going to go and I'm going to sell here. So let's plan the trade, because you need to plan the trade. You can't just enter it without a plan. You can randomly enter it, but you need to have an idea of what's going to happen if this thing pushes against me. So here we go. This is the stop loss. It's not really stop loss, because you're going to be adding to the trade when it's going against you. You're going to be adding to it. And so this is not a traditional stop loss. So this is the first position. I will be entering another trade here. That could be a potential resistance. So it was previous support. Then, of course, I can add another position all the way up here to have it here. This is pretty far spaced out. You can make the grid tighter. This is like 200 pips almost in terms of the first add-on. You could make it like, you could just take and say every 50 pips, I am adding to a trade. That is another way you can do it, but you need to base it on something. So you base it on the average move, the daily moves on this pair, so that you're not like, if you're trading a JPY pair, which can be very, very volatile, you're only using 50 pips, it can really backfire. So anyways, so you're adding here. So to here, 198, what's your risk? Let's say we're just going to be very conservative, so that we have enough room if it pushes against me. If it pushes against this one, we can have further add-ons. Let's just see if we have anything on the 4-hour that shows us all the way up here. That's much closer, but I think that's fine. Of course, you can always change your mind, and you can say, I'm going to space it out equally. So I would space it up even further up here. You can also use a multiplier. So you add one standard lot or something like that. We're not going to use one standard lot. That's way too heavy. We're going to use, you basically going to use 2 standard lots if you use a multiplier. Anyways, but you'll see that as we go along with this. This is going to be a longer video because I'm actually doing it with you. So you got this kind of set out. That is a large amount that you're going to lose. You can go and actually calculate it in terms of, taking the measuring tool and then say, okay, from here to here, how much is that? That's like 600 pips. Okay, this one is 200 pips. So let's say we are risking 0.25% of the account on this. That should keep us safe. It's still going to be pretty heavy drawdown if it goes here, because you're going to be adding from here to here and here. Maybe this one will skip and just add up here. We'll see. But so you're going to be in pretty heavy drawdown if it comes, but it shouldn't be blowing your account. Okay, so let's look at the position size, NZD USD. We're going to use 0.25 as the risk. I've already put in the account size. The base currency is USD. Just as a quick note, if you were to do AUD NZD, it would be NZD would be the currency of the account for TradingView, just so you know it. And then what did we say the stop loss was? It was 198. Okay, so 198. So we calculated, and you can see it is 0.13, so that's 13,000. Here you need to put in 13,000, and then we actually just do it this way. 100,000 will be one standard lot, so you know how to calculate it. Okay, so we said we are going to sell here. Then we're going to drag the take profit down here. And we don't use the stop loss. We're going to be adding to the trade as we see fit. Let's see. It looks like it's pushing further down. Now it's going against us. And at any time, you can at any time just close the trade, and it just went straight to profit. This is going to happen. So you can see we made $257 US on this trade. Quite nice. All right, we'll close this. And then you can decide again, well, am I going to go long or short? Or am I just going to wait? So let's see, I'm going to wait. So it looks like, let's see if it can push a bit lower. It's fine. All right, we'll just buy here. Again, you basically can enter randomly. We'll take profit up here. I didn't use the position calculator this time. You can use the position calculator and you can do the whole thing. So we have a long position here. We say we're going to have profit here, taking, and down here. We're going to add another position. Now we're on the 4 hour on this. I should have actually been on the 1 hour. But anyways, let's see here. We have some more support down here at 63,897, which is close to it. So anyways, we are going to leave it as it is and then just add to it. Now, if you're doing this by yourself, I really do recommend to do it like I did it the first time. I need to plug my laptop in. There we go. To do it like I did the first time, because that way you really are planning it out. So, and then we can actually just do it this way. Instead of looking at market structure, we'll just space it out rather evenly. So we have another position at least here. So we have bought, we have the TP in, and then we're going to hit the replay button. Let's see, it's going up, going down. And so look, here, you could decide, look, this is a double top. I'm going to close here. It's close enough to my profit target. You can do that. For the sake of the video, we'll just keep it. And it hits the profit target. Wonderful. So 542 bucks in profit. Let's see if we can get a trade that actually is going to go a bit against us, because you are going to experience that. Like, that's one thing about this approach. You are going to have times where it is pushing against you pretty heavily. So what shall we do? We bought here. We'll sell again. We use the same thing as before. It will be the same structure as we used before because it's a similar area. You're going to use the same TP down here. Well, we actually use it here. So 250 bucks in terms of what we can make, 250 bucks in terms of where we're going to be adding if you were to push against us. And this is starting to push against us. Wonderful. Let's see a bit more. So somewhere up here, that would have been a better place to add. I missed that. So we'll just wait. And it is going further down. And TP hit again. All right. Quite unlucky, yeah? So we're going to buy here. And let's see, maybe it's stuck in the range now. We'll put in the profit up here. Maybe that's a bit. So we stick to our 250 bucks roughly. See if it's going to push against us. And it is. There we go. So we're going to buy again. We can adjust the profit target. You can always do that. So let's say it's going to bounce. We're going to take the profit here. And it's pushing further against us. Okay, further against us. All right. Let's see if we can find some kind of bottom. or if it's just going to straight up, because this was a good place to add that we just were there. And you can be like, okay, you know, I'm in this position right now. I'm just going to take the loss. You can do that. It's $5. But you see how it works? Do you see how you're avoiding, you know, blowing the account, you're getting stopped out, and you have to do it again or whatever. You just basically do it. Oh, it's $107 now. let's see if we can go a little bit higher. A little bit higher. No, it's gonna go back down. Look at that. And there we go. So we'll go here. Oh, it's gonna break the lows. $735 in drawdown. Okay, missed the add-on here. We're just gonna add on here. It's a shitty add-on place, to be honest, after such a spike, but maybe we will be lucky. I thought it's going to break the lows. Now we're $1,000 in drawdown. That's 1% of the account. So do you see, even now, I'm like trading really shitty. Like I'm missing my add-on spouts. I'm not doing a good job of it. And yet here I am, and I'm only this much in drawdown. Basically you could have just gotten out at break even right there. So here we go. We're just going to buy again here. And you could use a multiplier. So let's say we use a multiplier here. And we will see how it goes. When you use a multiplier, you're of course doubling your risk. So that's something you have to be aware of. Now we're 3%, 3.8% in drawdown. This is perfect. This is the perfect example. So of how much drawdown you can, especially if you start using multipliers, you can get into. So you had a nice move down. We will use again two sizing, and let's see. There we go. It looks like it's found some kind of bottom. It's moving up a bit. There we go, and we're closing it. So we're closing here. There we go. So $940 now we've made on this one. I was confused because I have so many positions, but that's right. We added so many times. So look at this. We have started it somewhere over here, and it just started pushing against us. I think it was this one. Oh no, further back. Right, this one probably. Bought again. And it's gone. So it's been a long time that we were in this position. And this is one of the downsides for this approach, is you can get stuck for a long time in a position, especially if you're not managing it more carefully, like I have done. But you see also the positive. As you have seen, like the max drawdown we had was like 5% on the account, despite us being wrong using multipliers, because we are sizing appropriately. So this is really the heart of this approach. If you are not using appropriate sizing for it, you are not going to be able to do this approach. This is the downside, because if you're going into profit right away, you're going to make a small amount of profit, like 0.25% on the account is not really that impressive. But then there's other times where you're adding once or twice to it, you don't get out at break even, you get out higher up, and you really make a decent profit. It's a very simple strategy, and you can base your TPs and your add-ons based on market structure. So, you know, if we were to enter another trade here, let's say you're selling here, you can put the add-ons where there's market structure, and base it on that, and that will give you such a good intuitive feel for the market and how you can manage losing trades. So I think it's really wonderful. I think a lot of beginners should be doing this. I have done it on demo account. I got stuck in a position for like 1.5 months on my demo account. It was like USD CHF, and it took forever for me to get out of that position. But I got out of that position. I got out on that position on break even, or actually a small profit. And you can use whatever you want, whatever reasoning you want. The most important thing is that you just actually enter and you see what happens, and then you add to your trade as appropriate, and you size appropriately. Now, if you are going to size heavier, so let's say you're getting in and you are adding like 1 or 2% of the account into it, you are sizing pretty heavy for this approach, because if it does push heavily against you, you are going to be sweating, especially if you have correlated assets or other assets that you're managing in here, other positions, and they're pushing against you as well, and you don't have a lot of margin, you might be screwed. So that's why you want to make sure you are actually using appropriate position sizing. But I think it's a genius way of approaching the Forex markets, because when something pushes into a direction far enough, there is a likely reversion, because it's a steady state market. It tends to stay within the mean. And so being able to use this approach is capitalizing on that, and you're capturing volatility. Not only that, you will start to be okay with drawdown, and actually let's start to love drawdown, because you can add another position. And when it then reverts and gets into profit, the profit is actually going to be larger. So it kind of flips the whole thing on its head, and it helps you psychologically, because you can now see, if I'm sizing appropriately enough, there's so many ways I can manage the position. You could also just get out a small loss, if the position is pushed too far against you. You're like, yeah, I don't think it's going to go all the way up, and you haven't used the multiplier or whatever. You just recover it. It's a small loss, and that's it. So anyways, this is something I wanted to share with you. It's an easy, risk-free, to some degree, with quotes strategy. As you know, there are events that can happen where, Trump gets shot and Brexit happens and whatever, especially Brexit. That just, you can have a huge move down or up on these things when the black swan events happens. And even when you're sizing rather small, you can still end up blowing the account. So I hope this was useful for you. I have used this approach extensively in my own trading when I first got started. I don't use it at the moment anymore, simply because of the small sizing that is required relative to the capital that I'm putting up at the moment. I don't think it's suitable for me. And then, of course, also the fact that you can get stuck in a position for a rather long time. And during this time, you are still paying swap fees, which can add up, right? Anyways, let me know your thoughts in the comments below. I hope this was useful. Do it as I showed you. Plan out the trade. Make sure you stick to your plan. Make sure you calculate the position sizing properly. Do the back testing. Once you've done the back testing, then go to demo account. Once you're in demo account, you've forward tested it for a few months, then you can start going live with a small amount of capital, and you're not going to make much of money. Let's say you put $1,000 in or whatever. You probably need to size like 0.01, like the smallest lot size on this possible, because you're going to blow the account otherwise. So you're not going to make a lot of money, but what you are going to get is you're going to get experience. And experience is what's going to make you profitable over the long run. You need to learn to watch the markets. You need to be with the markets. You need to understand how they breathe and how they move. This approach is the best approach I have come across that will teach you that without explicitly teaching it to you, because it can't be really explicitly taught. It is only something that you can be learned through observation. And this approach will help you to observe the markets appropriately. Anyways, I will see you on the next video, and take care. Bye-bye.